Welcome to this video, and in this very section of this course, I'll be discussing on the topic combining support and resistance with demand and supply for precision entries. Combining support resistance with demand and supply for precision entry. So firstly, having a confluence entry is very important and more accurate compared to using only one technical indicator or levels to forecast your trading entry. What do I mean by confluence zone? A situation you are combining combining two combining two or more entries or two or more confirmation for your entry. Combining two or more confirmation. Example, I can see a trend line breakout or price came in contact with the trend line. So where I'm confirming my entry, I see a bearish engulfing pattern, like in this case. At the same time, that place is a key supply or a demand zone. That entry is going to be very strong and very rare before you fail that, or that kind of entry fail, except there is manipulation or sudden change in direction in the market. So in this case, assumption is that when the price comes into the trend line, it bounced. So as the price came into the trend line at this point, this is a pin bar candle forming. Pin bar is bearish confirmation. Though we also have a bullish pin bar which is going to form upside down. Now this is how a pin bar look like in a bigger picture. Is it a long upper wick? Though sometimes there's always a lower wick, little, but the upper side is going to be very low, just in this case. Sometimes it may come pure without lower wick. So that's pin bar. When it forms on the downtrend, it is inverse. That means this long wick is going to be on the other side. That is the buy confirmation. So in this case, this is a supply zone. So if I was to take this trade, I will only execute a sell after the formation of this candle, and this is another confirmation that sellers have taken charge of the market. So this kind of entry, you go sell after that bearish signal. Let your entry always be above the recent key level. So in this trade, I combine trend line, market structure, supply, candle formation, which is the pin bar. What else? Bearish confirmation. So this is massive entry, and this kind of entry very rare before this kind of entry fell, except there is serious manipulation in the market. So you can see this is called a confluence zone or a confluence entry. I combine so many technical levels or indicators to carry out my trade confirmation. So I just wanted to point that out before we proceed in this topic. So in advanced price action trading, the most accurate entry often occur when support and resistance align with institutional demand or supply zone. Each concept by itself has value, but when they converge, that's combining together, they provide high quality trade setup. Understanding how to combine them refine your precision in timing entries and improve your reward to risk ratio. Concepts of overview. Support and resistance define psychological or structural price barriers where market participants frequently react. Supply and demand zones, on the other hand, represent institutional footprints, the areas where large buy or sell orders originated. Like example is this case. Example in this case, this is a supply. So identifying overlapping zone. That's where resistance and supply meet demand and supply. Start by mapping the market structure zone. These are swing high, swing lows, or clear horizontal level tested multiple times. Next, mark institutional footprint, whereas where strong impulsive move began, often before leaving imbalance or order block or origin block. The most valuable setup occur when these two types of zones align closely, showing that both retail traders and institutions are watching the same area, right? So what does that entail? Let me clear this, then compress the chart. Let's try to illustrate what I just read. So looking at the overall picture of this trade, of this currency pair, this is a strong support zone, right? Over a period of time, price could not break out of this level. I don't need to show a resistance because I want to only work on this. Then I'm going to analyze the market structure from the up, then breakouts, leaving imbalance at this point. So the moment price break out of this place, this support zone has turned to supply or a resistance zone, right? Depending on what is going to happen in the future, I don't know how many times price is going to test this before it continue breaking upward again. But for now, I will take it supply zone. Once as the price broke out, that place has turned to supply because I've seen institutional footprint, right? Supply, I use this color to express my supply. Let's look at institutional present. Let's go to 2 hour time frame, right? That is where spotted. So there's institutional present before the price broke out of the structure. That is the last buy candle, the last candle in the opposite direction before price broke out of this the kind of consolidation move that was taking place at this point. So the resistance found supply. So at this point, institution is going to join forces with retail traders next to move the price downward because they have left their mark footprint from this point imbalance, right, to the recent low in the market. So in this point, what can we classify that executing bulk order? So they are going to revisit this support zone to execute another bulk order. So by that time, we retail traders is going to wait for them at this point to take the price downward. And you're going to notice that the move that is going to happen from this level downward is going to be massive, right? It's going to be almost the same number of pips it is or above, right? So that is basically one way to combine support and then demand and supply zone for trade, confirmation. So another way is confirmation through price action. Once overlapping zone are identified, traders should wait for the price confirmation before entry. And that is what I say. Once the price comes back to fill this imbalance, you don't just jump in. You are going to wait for the confirmation, bearish confirmation, one type of bearish candlestick that usually announce the present or the taking over of buy trade from the buyers, hence the sellers are stepping into the market. So you're going to wait for that signal even when price get to this point. You don't just execute. You wait to see a confirmation. Like I always say in all my course, waiting for confirmation is going to give you a little bit of late entry, but it is rather to be careful than to be solid, right? So always exercise patience. If you cannot wait, this time frame is too big for your confirmation, you can go down to 30-15 minutes to look out for a buy confirmation at this point. Without seeing a buy confirmation, it is not advisable to enter a live trade because, like I always say, nothing is constant in this market. Price can break out of this level and continue upward. Nothing changed. The market is going to still remain market. So these are a few of the price action confirmation candle that you can look for. Bullish or bearish engulfing candle, pin bars rejecting the zone, or minor structure break showing rejection of the level. In this case, you can look for bearish engulf, pin bars, or any type of bearish confirmation candle. So common mistakes. These are common mistakes that we retail traders usually make while targeting a trade like this. This is a very clean trade, which I'm going to execute this trade live. Yes, this imbalance is very wide, and I'm sure something great is going to happen at this point if there will be no manipulation in the market or any events that will change the direction of the currency. So some of the mistake is entering without confirmation simply because two zones align, right? So because I've said this is institutional pressure, they drop the price very massive and strong. If you can see, the trend is almost direct, like a straight line. That shows the pressure or the momentum that the sellers gather during this trade execution. Then we confirm imbalance. This is supply, I mean resistance turn to supply. That does not give you an edge that you should mark out a zone considering the institutional candle, and the rest we just jump into the trade once price come into this zone. That is wrong. You have to always wait for a confirmation before that. Misidentifying zones by drawing them too wide or overlapping unrelated level. You don't have to mark your zone to be too wide. Like I said, when you target institutional candle, just check the high and the low of the candle. Make sure your zone align with that candle length, right? Then you extend it. That should form your zone. It should not be too wide or too small. Ignoring higher time frame context, even conference fell if the broader trend opposed your setup. This setup we did it with 2 hours time frame, so that makes it a little bit strong, right? If I want to take this trade on a live trade, I will leave this time frame to 15 or 30 minutes to execute my trade. So I've already gained the confidence and then the clear structure with more higher time frame before I will now switch to that more smaller time frame. So in summary, combining support resistance with demand and supply zone filter out weak trade and highlight precision entry areas that both institutional and retail traders respect. The goal is not to predict every reaction, but to trade at the intersection of logical structure and institutional activity where probability is in your favor. So that's basically everything that we need to know in this trade, in this topic, as long as this topic is concerned. Intersection point will always give you a broader and a clear confirmation of where the market is going next. Then you have to be confident and know how to analyze your structure properly, right? In this case, this is a P level. Price tested this place 1, 2, 3, 4 could not break, right? So that was just additional illustration. We are done with topic. So this is a double confirmation as well. In this case, this is our zone. This is double bottom pattern, which confirm bullish trade. Price broke the neckline, made a pullback and continue. So this is a double top in this case. You have to also learn this candlestick pattern. I have a course still here on Udemy which I talk on candlestick pattern and then candlestick formation. Candlestick formation is the bearish or bullish confirmation formed by candlestick pattern. We have single candlestick pattern, we have multi candlestick pattern. Then chart formation is a kind of shape that a candle form, in the market. I have courses breaking down all this strategy one after the other and how to trade them. So that takes us to the end of this topic. See you guys in the next video.